Bitcoin 100k! This is it! Bitcoin just did it. It's officially broken through 100k! Woo! And now, all eyes are on what comes next. But, as always in this market, one question, maybe two, follow. What is next? Is this just the start of something bigger, or are we setting up for a textbook cooldown? Hey everyone, welcome back to the channel. I am Neil, and in this video we are breaking down exactly what's happening behind the breakouts. We will be covering Trump's new trade deal with the UK and what it signals for global markets, why this weekend's US-China meeting could move crypto before Wall Street even opens, the latest on-chain indicators that suggest Bitcoin's rally might just be getting started, and a heatmap and CVD breakdown to pinpoint where the next battle zones are forming. Let's get to it. All the three major US stock indexes closed higher. You can see the Dow ending at plus 0.62%, Nasdaq at plus 1.07%, and the S&P at plus 0.58%. And macro relief had a lot to do with it. As we all know, last month in April, Trump reignited global trade tensions with his tariffs. But now, we are seeing deals between countries taking shape. And the market is responding. The first breakthrough was with the United Kingdom. The US will reduce tariffs on British cars from 25% to 10% for the first 100,000 vehicles per year. And also, it will remove the 25% tariff on British steel and aluminium. In return, a 10% base tariff stays in place, expected to raise about 6 billion USD in revenue. Trump, of course, called this a very important achievement. But this is just the beginning. The real test comes on May 10th, when US Treasury Secretary Scott Bessent meets Chinese Vice Premier He Lifeng in Switzerland for the first round of negotiations. Depending on how those talks go, we could see movements between Trump and Xi Jinping. And with global markets closed over the weekend, crypto may be the first to react. With this breakout, Bitcoin has now overtaken Amazon to become the fifth most valuable asset in the world. Only three US mega cap tech names and gold are still ahead. And with the momentum of this rally, overtaking Nvidia or even Apple may not be as far off as some people think. Let's take a closer look at what the on-chain indicators are showing. Because while price gives us the headline, the blockchain gives us the story. First, according to Crypto Contact's bull bear cycle indicator, Bitcoin is now officially back in a bull market phase. But interestingly, the strength reading is still just 0.029, historically low. That tells us this rally is still early and the upside room is substantial. Now, looking at moving averages. The short-term MA is trending higher but hasn't yet crossed above the long-term MA. If that crossover confirms, history tells us it often kicks off extended rallies. Do you see that? If you look back at previous cycles, every time that short-term average breaks above the long-term line, the price doesn't just drift, it takes off. Then there's market cap versus realized cap, and it too is signaling the early stages of a full-on bull. Cycle indicators also show we are in a rebuilding phase, not overheated, just reloading. And the reserve risk indicator? Still firmly in the green. That means from a historical standpoint, it's still a favorable time to hold Bitcoin, not to sell. And if you check the Coin Days Destroyed, the CDD data, other coins are moving, but still nowhere near levels we've seen during major peaks. So from an on-chain perspective, this rally is healthy and still has room for further upside. Liquidity is flowing back into the markets. Long-term holders are beginning to trim some positions, which is expected. And, as I mentioned in yesterday's video, short-term holders have accumulated over 25,000 Bitcoin in just the past week. At the same time, open interest relative to market cap remains below 2%. What does that mean? It means this move isn't being driven by leveraged futures. It's being driven by spot buyers, real demand, real flows. And that's exactly what you want to see at the start of a sustainable rally. As we move into price territory above 109k, expect to see derivatives activity ramp up. And with that, more volatility. Short-term pullbacks? Always possible. Which is why we will need to watch behavior closely at major profit-taking zones. Alright, Now that we've laid out the fundamentals and market structure, it's time to look at how this move played out on the chart. Let's walk through what's happening on the heat map, because this breakout isn't just about candles and headlines. There's a story underneath, and it's all about liquidation flow and key structural zones. Over the past 24 hours, Bitcoin steadily climbed toward 100k, moving through thin liquidity zones. There wasn't much resistance in the 98k to 99k range at the beginning, and you could see it clearly on the heat map. The walls were weak, the path was open, and buyers took it. Then came the real test, 100,000. A psychological level, a round number, and a heavily defended zone. But when price hit it, it didn't stall. It punched straight through, and here's why that matters. Just above 100k, we saw a cluster of short liquidations trigger in real time. The heatmap lit up, short after short getting liquidated through 101k, then 102k, and finally reaching as high as 104k, where the rally hit resistance and was briefly rejected. That wasn't just a casual move, that was a liquidation cascade, and it only happens when the market is unbalanced. Too many traders leaning the wrong way. This wasn't buyers chasing, this was shorts getting wiped out, one by one. Now here's the most important part. Look down at the 99k zone on the heatmap, and what do you see? A thick band of yellow and green, real bit depth. This is exactly where the shorts were liquidated, and where new buyers stepped in. That zone has now flipped into strong support. We've already seen it tested, and it held. So, unless we see a major breakdown, 99k is now the level bulls need to defend. After that spike to 104k, price has pulled back slightly and is now stabilizing in a range just above 102k. For now, things are cooling off, and that's actually healthy. This consolidation lets the market digest the move, shake out weak hands, and prepare for the next leg. There's still not much resistance above. The next major wall is forming near 105k, and as long as we hold above 99k, bulls are still in control. The breakout above 100k wasn't random, it was a clean short squeeze through thin resistance. 99k has flipped into support, 105k is the next big wall, and right now, Bitcoin is holding the range with bullish structure still intact. If we get another push with volume, the market could move quickly again. Stay sharp, because this chart is still loaded. Next, let's talk about who's behind this rally and take a closer look at what the volume data tells us. As seen on the CVD chart, we can see that the buyer strength is dominant. The CVD curves show that institutional buying pressure remains strong, especially from the mid-sized and larger players. We are not seeing fading, we are seeing follow-through. First, you can see that the 100k sell wall was broken. It happened in an instant. We saw stacked limit sell orders get absorbed and cleared one after another in real time. That tells us one thing: buyers are not hesitating. They are punching through resistance, not backing away from it. And now, as of this moment, the next wall is in sight. 105k is where the biggest concentration of sell orders is sitting. Let's take a look at the movement of whales. Let's start with the 1 million, 10 million cohort, the mega whales, and that's the brown line. After sitting on the sidelines for days, they have finally stepped in, and not just slowly, we are seeing a sharp vertical move up. This group is now aggressively buying into the 100k breakouts, and that's the strongest activity we've seen from them in weeks. So, they are not scaling anymore, they are chasing, and that tells us they expect this momentum to continue. Next, we've got the 100k 1 million whales, shown by the purple line. They have been a bit more cautious. They took profits during April, stayed flat for a while, and have only recently started dipping back in. Meanwhile, mid-sized whales, the 10k 100k group, are still leading. That's the green line, and it's been rising consistently since the 93k zone. They have carried this rally from the beginning, and they are still buying. And retail? Still mostly out. The smaller brackets, under 10,000, continue to trend down or sideways. That's typical. Retail usually enters late. Right now, this is an institutional move, plain and simple. So, here's the big takeaway. Mid-sized whales led the charge. Mega whales are now jumping in. Retails is still missing. And the breakouts? It's still gaining steam. So, where does that leave us? Bitcoin is holding its breakouts. The macro backdrop is warming up, trade tensions are easing, global liquidity is flowing, and the Fed has paused. At the same time, we are seeing clear support from under 100k and no heavy resistance until we approach 105k and above. But that doesn't mean we are in the clear. As we move higher, profit taking will increase, sentiment is rising fast, and short-term volatility is still a threat. But the structure is strong, the fundamentals are supportive, and the breakout, so far, is holding. So, what's your take? Does Bitcoin keep climbing from here, or is it a pullback around the corner before we make a run at 110k? Drop a comment below, I'd love to hear your thoughts. And if this breakdown gave you a better view of the markets, tap that like button, subscribe to the channel, and turn on notifications so you don't miss the next updates. Thanks for watching, stay sharp, stay ready, and I will see you in the next one. Bye bye.